Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap. My name is Doug McKay. This is our morning leap session where we set up our trade plan for the day. Each morning we come together and take a look at the market, macro to micro, structure of the market, and then we drill down to the trade levels, the targets, and our hypotheses for the day. My name is Doug McKay. I already said that, didn't I? I just excited from the non-farm. This is a subscription room, so we are a small group of traders that get together every day in these morning sessions, and then we do live trading and live analysis. I'll put my contact information up in just 1 minute. Before I do, please read through the disclaimer. Nobody from Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. My contact information, quantumleapfutures@gmail.com, or give me a contact request on Skype. You will need a Skype account. That's what we use for chatting. We use the GoTo for broadcasting, but Skype chat. I'll be Doug_McKay. I'll be the one from Windsor, Ontario, Canada. Of course, if you like this video, there's a couple of years of them up on YouTube. Just do search under Quantum Leap Futures. And then if you like what I do, follow me on Twitter @crazy2. Okay, yesterday we were looking for a rotational day again, and we were using the 54 as one of our main trade levels. That would keep us, outside of the Thursday value area, and if we didn't hold that, we were looking for rotation down to 45. Now, I really thought we'd get both the 56 and a quarter, or 50. What was the VPOC? The VPOC was 56.75. I thought we'd get both of them and bounce between the two, but we came down and got the lower one, and then we pushed down through, and then we just sort of bounced around in that 40 level. And I was saying that we'd probably end up with a double distribution day, and that's exactly what we got, with the LVN being here at 45.75. So 45.75 is going to become our key line in the sand, because it is above us right now. It is going to be double distribution. When we get above that, you want to be long into that 51, 52 area. A lot of volume went off there. We got a nice zipper up here. But currently right now we are trading at 32.75. We're below the year open, and we have that next big target below us at 25. So let's just start with our normal routine. I like to start the day looking at a monthly and then drill down. I use a 9 EMA, 20 SMA. I'm looking for slope and separation, where the trend is being violated, or how strong the trend is, and then I work my way down into the intraday. Very strong trend. End of the year, we challenged it, then we took it back, then we challenged it again in December. We fell out in January and February. March and April, we took it back, and now we're challenging it again in May. But we are above the 9 right now. We're just sitting on top of the 20. The trend is still intact until we break below the 23. I'm really watching that 16 level, and you'll see why when we get down to the structure. Going to the weekly, we are challenging the trend on the weekly. We've had this parabolic move up on the weekly, and we challenged the one-time framing last week, and we've broken it this week, and we're below the 9. We do have the naked cross down here, all the way down at 1983 50 area. Don't think we're going to get there this week, but that's a target that I'd be looking for if we don't get back above the 9 on the weekly. Going to the daily, you can see that we've rolled over. We're starting to get slope and separation, start of a downward trend on the daily. A challenge to the trend will bring us up to the 2056 area, and I'm looking at that 2056.75. Going to the intraday, you can see that we've been in this downward trend. They challenged it, and then we got continuation, challenged it again, now we got continuation, and we've broken below. We are getting a bit of a technical gap right here, so it wouldn't be nothing to bounce up into the 20, 40, 50 area. Going to the 1 hour, same thing, downward trend, slope and separation, but we've got a technical gap, likely get a bit of a bounce. Going to the 30-minute, same thing, strong, got a foo-bar happening on the 30-minute, possible bounce to close the technical gap, but again, you got to use these setups in the time frames that they're in, and we need the Mr. Sneaky to come in, in the next 30 minutes to give us an idea. But we are creating a technical gap and likely to get a bounce. On the 15-minute, you can see same thing, slope and separation to the downside. We're in a downward trend coming into this market. And here's the 5-minute, created the technical gap. Gap fill will take us up into the 20.34 area, and but we are in a downward trend coming into this market. Taking a look at the structure of the market, we've been talking about this micro composite that we broke back up into. That was the last quarter of 2015 with the upper distribution, the Gaussian distribution up here with the microcomposite LVN at 2016, and we worked our way up through it, came up into the microcomposite VPOC at 2063.50 and the composite VPOC that goes back to the beginning of 2013 at 61.75. We tried to break out of the value area above the 86, put in a new all-time high, and since then we've been rolling over. And now we've come back inside of this microcomposite that we were in from March the 17th through to April the 12th when we broke out, and now we've come back down into it, and we are inside of the value area. The value area runs from 57 down to 32. We dipped just below that on the news. We are challenging the value area. 32 is going to be an important level for us today. Can't hold 32. The next big destination is down here, down at the 24.75, 25 area. Above us, we've got the 43.50. I'm really watching this 40.50 area for the bounce. If we hold the 32, looking for a move back up into this balance, the microcomposite VPOC up at 40.50. 43.50 is going to be our key line in the sand above, and if we get above that, really it's going to be 45. We've got the double distribution, and the LVN between the double distribution is 45.75, which is right around that that 44.50 area for the last 2 days. That's the most traded price, the 44.50. Above that, I'd be looking for working our way up, back up into the 47.48, and then the other big number is going to be that 51 area, 51.25 above. So let's take a look at the overnight. Now, we have gone down in the last 30 minutes on the news and put in a new low overnight. We still have 30 minutes to go. We could possibly get a VPOC shift here to the 33. We could put in a new low below 30.50, but right now our overnight low is the 30.50. Don't need this. Our VPOC is 39. And our overnight high is 46.25. All right, and inventory is net short overnight, so we do have some weakness, although we've made a pretty strong move to the downside and likely to work our way up and do some repair up here in the profile. Not much more we need off of this chart, so we can get rid of that, expand this out. All right, so let's take a look at the levels below us. Our key support is the microcomposite value area low here at 32. Below that, I'd be looking for a move down to take out the overnight. There is a target here at 29. Actually, it's going to be 28.50 below it, then 27, and then the big target and the daily downside target. This is the big target below. If we get below 32, I'm gunning for this 25. This is also our daily downside target. Our 20-day ATR is running 21.40, so off of the high overnight at 46.25, our daily downside ATR target is 25, and that's also right there at the former microcomposite VPOC and CHVN at 24.75 and 24.50. Well, I'm using the 25 as the target because it's the daily downside ATR target. There's my 34. I should have just hung on to that long, but I can't trade and do these sessions at the same time. And then below that, below the 25, we've got a little bit of support at 22.19, and then the big area and the key support below us is down here at the 2017-2016. Our weekly ATR target to the downside is down here at 2011.50. Not likely we're going to get there, but if we get into a continuation trend day down, that's something that that could kick in. Our week open is 20.60.75, so 20.60.75 minus the daily ATR 21.40 gives us 20.39, and that is our critical mass for the week. It is the first week of the month, so I don't really put a strong emphasis on critical mass, but you know, if we can't get above that critical mass and get inside of the prior day, we could get capitulation by the buyers, and we could see a bigger push down as the bears take over and push us down towards that 2025 and possibly 19 or 16. Numbers above, obviously 39. I'm going to be using 39.50, the range low from overnight. I'm sorry, from yesterday's RTH. Above that, look for the move back into balance at 40.50, and then I'd be targeting the 43.75. It's also going to be a trade area because it is both the value area low. We've got the naked close here at 44. And if we get back inside of value, I'd be looking to come up and test the upper side of the double distribution from yesterday and our key line in the sand above. And didn't do that right, did I? Above that, it's all going to be about coming up into the target, the 47.48, and then the big target above is going to be the 50.25 to 51.25. 51.25. You've got yesterday's open, you've got the naked VPOC, you got the CHVN, and the smaller microcomposite VPOC. Above that, there's really nothing to hold us down until we get up into the 55. Big target above balance is going to be the 56. Our overnight, that's yesterday's. Did I put in the overnight? Yes, I did. And then above there, you've got anything above the 58.75 area. We're back up into that microcomposite VPOC at 63.50 and the composite magnet, the most traded price going back to 2013 at 61.50. So those are the levels. How do we trade it? What are my hypotheses? Well, we've broken below the year open. My main hypothesis is we're going to get an open auction out of range. We're going to come up here, test the year open, the critical mass and the range low from the prior day, find initiative sellers, and then rotate us back down through, come down, test the support at 32, take it out, and come down to the 30-50 with the target, main target below being somewhere between the 28 and the 25, with 25 being the major target, and then basically just chopping down in this prior liquidity level. So that is the hypo number one. Hypo number one is a bounce, failure, move down through, take out the overnight low, and a push down into the 20s, between 28, 50, and 25. Hypothesis 2 is we get an open auction out of range, come down, take out the overnight low, find the responsive buyers somewhere between the overnight low and this 28 area, and then start working our way slowly back up into the prior day range, with the key target being the middle of the double distribution at the 43-44 area. That's hypo number 2. Hypo number 3 is we come up, we get responsive buyers right off the bat, we move up, we chop around into the 43.75 and then we push through and get an impulse move up into the 50.25 and basically close somewhere in the upper distribution of the prior day. So hypo 1, pop and then drop. Hypo 2, drop and then grind up into the lower distribution. Hypo 3, a push up, chop around at the low, and then a impulsive move up to test the double distribution, and then a late day probe up into the upper distribution. Those are my 3 hypotheses. Don't know which one's going to happen, but I know how I'm going to trade it and the levels I'm going to trade it at. Taking a look at the Keltner, our center Keltner line is at 34.75. If we don't hold that, a move down to the lower Keltner takes us down to that target below our key support at 28.50. If we hold the Keltner center line, a move up to the upper Keltner is going to take us up to challenge the range low and that 40.50 microcomposite VPOC. Quick look at gold. Gold popped on the news. It was a beautiful thing. The microcomposite VPOC is at the 83 still. We've gotten above that 86. We said if we got above 86, our target would be this 94. We tested the value area high of the microcomposite and just failed off of it. If we get back above the 94, today I'm looking for a move to test the 1300 and possibly a pop into the 1300. Key line for us is going to be the 86.40. If we can't hold the 86.40, look for a move back into balance at 83 and a sell-off down to the 1275, 1276. That's the composite LVN and the microcomposite value area low. Anything below that, the target is going to be the 68 again, and the test of the microcomposite range low. So that's what I'm looking at in gold. I think we're going to see some chop here in gold between the 90 and 95 area for most of the day. But if we do get above this 95, a push through up into the 1300s would be expected. So that is going to complete our pre-market session. Sorry I was late, but I do like to trade the non-farm. We should take a look at the news before we close this out. So non-farm came in, was a big miss. 203 came in at 160. Unemployment rate unchanged, a little bit better on the Canadian side. Hourly earnings came in as expected. So pretty much a miss on most of the news. 10 o'clock we've got the IV PMI, but it's not really big. It's Canadian side. And then consumer credit comes out late in the day. But really all our major news is complete. So as always, trade well, trade safe, and we will catch you on the flip side.